All right, hey there guys, Sam here back with another video. This time by request. We've had a number of people asking about the footprint Autotrader, best use cases, how to set it up. I would say there's no right way to do it. There are just preferences. Now, what you're looking at here, this is a 40 range of the MNQ. I have been trading it the last couple of days. And of course, I'm recording this on Tuesday the 16th. We're day before a pretty substantial Fed meeting. I don't know if I weren't doing a little video content here that I would have traded on either day. Right? You had not the best price action, as you might suspect. Right? A lot of chop, a lot of rotation as the market is kind of positioning for I think what is now expected to be a rate cut, right? But then how does the market respond to it? So not the best day, for example. Both days were kind of tricky, but I was able to crank out a couple $100 on this little Apex account that I use for these kind of demos. So okay, right, it's decent, right? But plenty of difficult trading. So I think the idea here is, even on a difficult day like today, where you have so much rotation, there were little pockets here where there was opportunity. All of the trades I took were all from the Autotrader. And there's a method to the madness here. Now, if you're looking at a chart like this, if you're unfamiliar with the footprint chart, this will probably be overwhelming and a bit confusing. That would be for a different video. We're getting into the details of how I have the footprint chart set up. Again, you could set it up with just bid ask. This happens to be a setup here that I think I got this from a member in the Discord. I just like the color coding. All it is bid ask on one side and then a volume profile on the other side. That is very, very simple, very common footprint setup. The highlights here are the imbalances, whether stacked imbalances or just a imbalance within the bid ask within that 40 range. So you're seeing the potential. So you can see a couple of good examples here. Let's see if I can find something. So here, up at these pivots, right? You'll often see there will be consistent footprint events that you'll find at pivots, right? And or if not the exact pivot, it'll be in the following bar. And that's really the idea behind the footprint Autotrader. It's going to analyze the events within a footprint bar candle, and it's going to read it faster than you or I can. So it can identify these, particularly if you're setting it up to read 2 or 3 of them at the same time as qualifiers. So for example, you can see a couple of footprint events here. We get exhaustion up here at the high of this bar, and then on the next bar I get a delta slingshot, which is a 3-bar pattern, which is quite consistent with what you're seeing here. So where's my little? So we're pushing up and then we're coming down, right? So we hit exhaustion here. Then as we push lower, then we start to see some additional selling, right? And you can look at the delta below, right? Which is often what you want to kind of keep your eye on as the market is moving. Particularly if it's moving in your direction, right? As the delta is staying negative, we get down to this low, and then you see all of the potential. Right, of course you don't know at the time, but you see all the potential, all these short imbalances here, all this aggressive selling down here. Right? Potentially you've got traders on the wrong side of the market. It goes up, and then you see the same thing again. You note here we get a slingshot here and a slingshot here. So these are the kind of things that would allow you to say, okay, well, if I review, go through a day, a week, however much time you need to identify, are there consistent footprint events that are happening at pivots that would make me want to put them in my buttons here. Now these are, we'll go through this in a second. These are the ones that I use. We have the standard here. All of these are available to you, whether it's a flip or, here's a, do I have a slingshot in here? Here's a delta slingshot, right? So here's a slingshot. Could be trap traders, right? Potentially, somebody bought it up here pretty aggressively. Is that a trap trader? Could be. The value area gaps, exhaustion prints, right? Here's exhaustion, exhaustion, exhaustion. These are consistent events that will happen. You'll find within a footprint chart when the market is moving in one direction as opposed to just in rotation, that you can start to identify, and then you can just turn them on. So for example, here, if I wanted to put together a little combination here for my footprint Autotrader, I might say, okay, if there's a delta flip or an exhaustion print or trap traders or a delta slingshot, if I can get any 2 of those to happen at an area of interest, take the trade. Now, one thing that's important to understand, that with the Autotrader, it's always entering at the close of the bar, the open of the next bar, which is why it's pretty consistently you'll find that people are using this successfully. Well, I mean, I'm sure there's probably others using time-based charts, but I find it much more advantageous to use a range bar because I don't want a giant, if it's a 60-second candle, I don't want to be entering if it happens to be, for some reason you get you're getting a big spike here, and I get a giant candle like this. I don't really want to enter at the top of that candle at the open of the next bar. So that's the advantage of working with range bars here, particularly with the footprint Autotrader. Is that you're not the worst case here. Again, there's $20 a bar. You might get in something on the wrong side, and then depending on your stop placement, it won't be as severe as something that could be 100 ticks in 60 seconds. In the NQ certainly could be, and then you're entering at the high of that bar. So just something to consider if you're an owner of this, or if you're trialing. You might want to say, now there's no magic to 40. It's just a nice round number. Again, $20 a candle. You might try a 30, or you might try the 1 minute. See what you find there. Again, there's no magic formula. It's just a matter of preference, and then some experience, and then watching how the market reacts. So the idea here is not to come over here and turn it on and go, okay, well, let's leave long on and short on and just see what it does. That's not the right way to use it. You want to use it at areas of interest, right? So for lack of a better term. So if for whatever reason, if we came up here, we identified, maybe there's an imbalance here, or a fair value gap, or a liquidity sweep. You've identified a potential for, maybe this is a liquidity sweep here. You see the event happen. We get up here, and then, I've got some exhaustion here. Why no follow through? I've had this big blast of delta to get up here. No follow through. Right, delta turns. So that might be the kind of thing you identify, and you say, hey, well, if there's exhaustion prints, I may want to turn this. Let's see. I'll just show you here. I think I can't do this here because the market's still open. I'm going to say, okay, well, if we get up here and there's an exhaustion print and there's a delta flip or a slingshot here, if two of those happen, I want you to take the trade short. So in this particular case, it would enter right here, right? It would enter at the open of the next bar. I've got that right on the close, right? You're gonna enter right here at the open of that candle. Stop, again, it's up to the individual, your risk tolerance, but certainly wouldn't be unreasonable. Put your stop above that pivot, because you're kind of making the assumption that with the exhaustion print here, market is heading lower. Same thing here, right? We get all of this imbalance down here. You see all of this aggressive selling here. Whoa, no follow through. Then we get positive delta with all of that imbalance. This would suggest potentially trapped traders, right? So as the market heads back the other direction, right, and you see the same thing happen again. We get up here, look at all the imbalance, all the aggressive buying here. Whoa, and then slingshot, delta's negative again. So the idea is that you don't have to go through the process of going, okay, well, let's see here now. What do I have? Okay, it looks like I have imbalances here. Where's the volume profile? Okay, right. So, what's the delta? Right. Okay, good here now. Is that a slingshot? Oh God, well, how does that slingshot go? Right, I know it's a 3-bar pattern. You have to do all that, right? It's going to do all this instantaneously, right? It's going to identify it and enter the trade. Where your trading ability or your identification. Well, let me rephrase that. Where you as the trader are really dictating and controlling it is when you're turning it on, long or short. Well, first, when you're turning it on, and secondly, long or short. So up here, when you're right here, you might be thinking, boy, this thing is running. I want to be long. Well, someone else might be looking at that thinking, all they did was sweep the liquidity here. So, if there's some bearish footprint price action here, I want to be short. If it's there. Now, if you're so for example, this is the 8 that I use. If I'm up here and I say, okay, I got a slingshot, I got overlapping value areas here, I've got imbalances at the low. Yes, I want to turn it on for a short, right? So do I get this little push? Well, it's not a monster move, but at least I'm on the right side of the market. Here's another example, right? We're coming up. Look at all this imbalance up here, but that's pretty aggressive buying up here. Delta's only 24 right now, and then we go into rotation, and then eventually down we go. All right, so this is good. Now I'm coming into the end of the day. Probably better to look at this earlier in the day. Another one here, right? So now, one thing you got to be careful of always with the footprint chart is you're in isolation. You don't have context here because the candles are so big. I can't tell where I am, really, right? Without looking at a candlestick chart, right? That's what I would strongly suggest is that you have some reference. Why would you be turning it on here? Well, if I just go over here and we look at a 5-minute candle. Oh, let's see if I can do this. 1227. Looks like it would be this candle here. Looks like that's it right there. Okay, right. So did you get a lot out of that? Not really. Again, it was look at all the rotation here on a 5-minute chart, right? It's just lots of chop, right? Just market's not really doing anything. Not a great day to trade. But if I'm up here, I might look at that and say, well, okay, well perhaps there's a liquidity sweep that's just happened here, and they're running that. Okay, do I want to consider putting a short? Well, you might not see. It's a little bit different than saying, oh, with the candlestick chart, okay, I'm just going to short the market, or I'm going to create a limit order here, see if I can get short. Over here, it's a bit of a trade-off. You're saying if the order flow events happen within this 40 range candle, take me short. If they don't happen, if the sequence, in this example here, I have 8 of these. If 2 of the 8 do not happen, there's no trade. And you might look at that and go, well, oh, man, I should have just shorted it at the market, right? Well, that's not the way to think of it, right? The way to think of it is, okay, well, there's one where maybe those things didn't fire, and I don't remember if they did or not. Here, we've got a few events here. You've got imbalances here. You've got stacked imbalances at the low. But that's not the point. That you have to be prepared to miss a trade or not get entered into the trade if 2 of these events don't happen at that pivot. Now, does that happen? Yes. Does it happen often? Not very often, right? Not enough to where you would be frustrated. God, I shouldn't be using this damn thing. It never gets me into the trade. If you're only setting it to 2, likely one of these 2 is going to fire. And if it doesn't, okay, well, maybe you didn't want the trade. You make it 3, that's going to reduce the number pretty dramatically. So 2 is kind of a nice number. And you could do other things, of course, minimum delta, max, minimum delta percentage, min, max, percentages here can be set so that if we don't get the delta minimum or maximum that you're looking for, or the volume that you're looking for, no trade. And you have the other advantage here of saying, okay, if any of these happen in 1 bar or 2 bars or 3 bars, remember a slingshot, that's a 3-bar pattern, or a delta drop, or some of the other things that are here in the standard setup here. A delta trap, a delta rise, delta tails. Those are 3-bar setups. So you might look at this and say, well, okay, well, if any of those happen within the last 3 bars, put me in the trade. Now, be mindful of the fact that any of these, a flip, a rise, a tail, a trap, any of these, you're going to decide because they're bull or bear, right? So you got to decide, oh, am I looking for a delta flip that would put me short, or a delta flip that would put me long? That's the way you're using it, is which side of the market you're looking to go for, right? You want to be long or short. That's the way you use that. I would suggest if you go to 3, right, you might be frustrated, right? 3 is a lot to get in one candle. But if you open it up a little bit more, if you're down to just 1 bar, right? If that only occurs in 1 bar, well, again, that's a bit of a trade-off here. These are 3-bar patterns that we're looking at here. These are all 3-bar patterns. Over here, these would typically be 1-bar. This would be within 1 candle. Again, no right or wrong way, just a matter of understanding the options here. And it's going to take a little experimenting. Ultimately, all I did was just go back and look through the charts and say, okay, at significant pivots, what are consistent things that are very regularly found? Stopping volume at a pivot. Well, that would make sense. A bull or a bear value area gap. Okay, well, here you can see a gap here, right? So here's the, you see it here. Here's the value area here, and then here's the next value area here, right? That would be a value area gap. Here's rotation, right? We have no gap. Here's another gap, right here, from this value area to this value area here. But again, rotation, a lot of rotation on a day like today. This is the kind of stuff that will eat you alive. That's got to be very careful with this. With that rotation. So let me pop this open again. This is where you can really get eaten alive, right? Which is why you can't just look at the, well, let me rephrase that. My suggestion would be not to just be looking at the footprint chart. You don't have context. You need that context. Otherwise, if you're sitting here, long or short. Well, yeah, in hindsight, right? Oh, long, of course. Mm, you sure? Right? Were you sure about that? Look what you're coming into this. Let me get that off of there. You're coming into this value area up here. That where you may or may not want to be buying into that. Again, volume profile. Some of the, that's just part of the footprint chart. You may or may not look at that and say, oh yes, I want to be long. Or you might be looking at it saying, well yes, I may want to be long off of this move, but I only want the retrace. So this is a decent example. This is the kind of thing I would look for. If I'm pulling up here and then I'm retracing, when I get here, if I get some bullish order flow activity, perhaps I can get trap traders. I mean, did we get it? Well, we did, as a matter of fact. Right now, this one, I've just got a 21 EMA on this just for kind of a reference. Okay, here's the swing, here's the retrace. I get a higher low, and then I go again. So right down here, you can look at this and say, oh God, look at all the aggressive shorts that are stuck down here. Look, oh, value areas are climbing. Here's a little value area gap here, right? So that might be something over here where I've got oh God, do I have got a value area gap? Well, I think I have it over here. Bull bear value area gap. Got it over here, right? So if I'm seeing this, and again, it might be within 1 or 2 bars, right? You got to do a little testing with that, just to see what you like. Again, there's no right combination. There's no right sequencing here. When we first released it, we only had these. Just recently have we added these to where you can set these based on, it's all part of what's in here, right? So everything that's over here is already in here. So for example, an inverse imbalance is one I look for very deliberately. Now I don't have it on here because I have it over here. But if I turn it on, you're going to see all of the inverse imbalances. Well, look at that. Now, again, you don't want your chart so full of lines that it's paralysis of analysis. So thus, do I need to have it on? Well, not really, right? Because I got it on over here. So if I see it and I know what it looks like, if I see it, oh, okay. But that might be the kind of thing that you do to try and identify which of the custom tools you want to have as potential trigger events. Again, they're all the things that are here. All of this, from absorption down to zero prints, those are all options that are available in the custom buttons over here. These are defaults. Those tend to be the delta signals. If you want to know more about these, they are all on the page of the footprint chart. So if you go to our website and you go to the footprint chart, which is I think it's 3 pages of content because there's so much in it. If you're not sure where the delta flip is, go over there and look at it and go, oh, I see. Okay, it's a three bar sequence where we get the delta flipping. Okay, it's not that complicated. Delta reversal, or exhaustion print. Okay, we get signs of exhaustion. No more buyers, right? And it's gonna, you see it, right? It's labeled. Here's an exhaustion print right here. Where's all the buyers? Going the other direction. So sling, exhaustion. I've got delta percentage here. Here's exhaustion at the low here as we go up, right? There's right. So the kind of thing that you'll see as you go through it. Okay, well that exhaustion shows up pretty regularly. But then so does delta divergence. So be careful, right? If it's on too many candles, right? Is it really giving you an edge? Here's divergence down here at the low, and then exhaustion, right? Some of these are really quite common. So you may not want to enter a trade just on one of those events. So my suggestion would be when you start experimenting, experiment with at least 2. Right? Again, these are the ones I use. Experiment with at least 2, and you might give it a bar or 2. Again, depending on whether you're using range bars or time-based or tick, whatever you may be using, understanding that some of these are multi-bar patterns. Okay, with that, now let's go look at how we make some of these. So hang on a second. So, for example, let's just use let's use trap traders. Now, trap traders happens to be on both sides, right? But because I like it, it's one we want to look for. Here's a few examples, trap traders, where you have people that have gone aggressively long, right? It's market orders typically, right? They've gone long, and the market's moving the other direction. Likely, they're going to be looking to cover quickly, right? Which can add fuel to the move. So let's just do trap traders here. So if this were blank, and I would just click on the little pencil button, and you're going to get a little template here that, for those of you that have worked with Algo Studio Pro, this will look very familiar. Well, within this, right now, I have lots of options here of what I could do. I could do bar direction. I could do 5-bar swing low or a high. I could do price. There's a number of things I could do, but for our purposes here, for this, because we're working with order flow, one of the categories is order flow. So when I go into order flow, in this particular case, I'm looking for a candle that has, for a long, on the long side, let's open this up so you can see it a little better. On the long side, well, I want bullish trap traders. Right, for the short side, I want bearish trap traders, right? You've got all of these to choose from. Everything that is in the footprint chart is available to you here. You can set up with anything you want, right? As many of these as you want. Now, well, I shouldn't say it that way. I guess you got 16. Or you could have 16 of these set as order flow events. In addition to, well, you know, if you wanted to do price here, I want the, you know, so I want trap traders, and then I want the volume to be higher, and I want the next bar to close above the prior bar's high. Okay, right? I mean, all very, very simple kind of things you might look for, right? So that's just a nice example. You could certainly add that condition here. Well, I want the price to bar close greater than the previous bar's high. Well, let's get high, right? So now I've added another condition here. So that might be something you would consider and say, oh, for trap traders, okay, I only want to take it if I have trap, but essentially what you're looking for is trap traders at the low. So if the next bar opens above the high of the candle with the trap traders, perhaps that's a trade you want, because remember, it's going to enter not on the candle with the trap traders at the open of the next bar. So if it's opening higher, right? Something to think about, right? That's one way that you might do that. Now, once you create them, you're going to want to save them. And as we look here, let's go here. You see all the ones that I have saved. So I just, you know, create a folder, Footprint Autotrader, and then all of your custom buttons will be saved over here, right, within your documents, just like within NinjaTrader. So you've got a whole menu here, and these are just, you know, I've got quite a few of them in here. But no limit to the number other than the number that are here, right? So you've got 16 spots here. Now, one thing that in this current version, you can't use both, right? So you can't combine a delta flip and then say, okay, well, if there's a delta flip and then there's multiple imbalances, that's enough, right? You can't say those two, right? It's either one page or the other. Now, you could over here, if you wanted to, create delta flip and delta trap over here for some of these. You certainly could do that. Then you can get combinations. This just happens to be the ones that I like. Again, this is just me, right? There's no right or wrong reason here or right setup. There's almost unlimited flexibility in terms of how you want to engage with this. The point of this is that it's going to read the data faster than you can, or that I can. I can tell you that for sure. Oh, God, is it exhaustion? Wait, is it delta flip? Oh, wait a second. All right, is there trap traders there? Oh, wait. Oh, God, I forgot. There's blah, blah, blah. Right? By that time, the trade is gone. Now, in addition to all of the setup here in terms of when it's entering the market, we have an ATM setup. So I will typically trade 3 lots with you know, particularly the MNQ, right? You know, maybe not something for 1 lots, but you can trade 2 and keep a runner. Enable the runner or not, right? You don't have to. If I want to enable it, then I've got all of these choices here. Do I want trailing stop? How do I want my stop? What's my target? Do I want a 3-to-1 risk reward? Break even at 1.5, right? Lots of choices here. This is all available to you. It looks very much like Algo Studio Pro. So initial stop, okay, 100 ticks. For runner, okay, right, same thing. I'll typically keep the stops the same. And then if the scalps get hit, right, you leave a runner on. Right? Can you get 3-to-1 off of it? You know, those are just, that's all just individual preference in terms of what your risk tolerance is and what kind of targets you're after. Once you're in the trade, you certainly can manage it, break even, close it. All of that is available to you. If you were to disrupt it before it hit a target, you would likely have to re-engage it, right? So that's all just native with Ninja. If you were to close it, if you use any of these to close it, you're going to have to re-enable the strategy, right? So remember, the Footprint Autotrader is a strategy, not an indicator. The footprint itself is an indicator. The Autotrader is a strategy. So you have to put the strategy on, and then within Ninja, you go over to your strategy tab and then just enable, disable, right? Or you could do it right here, right? Enable, disable. If I turn it off, these are going to go away, so I'm going to leave it on. Okay, what have I not covered here? think I've got just about everything. Right. So today, just to kind of referencing today, it's super simple here. This might be a way that you would approach this. Now, the last 2 days, again, we're kind of mirror image, right? If we look at the last 2 days, it's really funny how the market does it. It's a great example of just auction market theory. So here's yesterday's open. So we just scream up, right? We set the IB high, and then we just chop for the remainder of the day. It's one last little squirt. And then overnight, okay, oh wow, we're really pumping here. So if I were to, I'll just use from the low here, it's pretty. That should not be very surprising, right? This is price discovery. We get in here and market creates value up here, and we stay up here and we ride the rail of the IB for the rest of the day. Then there's that last little pump, in the after the cash session closes. It's not a great time to be trading, but some people do. And then this carries on overnight, but we aren't able to sustain. So essentially, we get the mirror image of that. So today we open and we get price discovery down, and then we do the same thing. We chop down here for within the value area of yesterday, and then we get a little chop at the end of the day. So let's use our fixed range tool here. So if I did, let's just do this right here. You see kind of the same thing. So you see how these have just overlapped, right, with one another. Little push here. Is that expensive? Too inexpensive? Or where's value? We kind of end the day not too far from where the market finds value, which is why these have been really difficult days to trade. Because if you're not in the opening move, which can be a little scary because it's a bit of a chase. Let's get these off of here. It's a bit of a chase when the market launches like this, but you have to recognize when it's doing that. So that might be the kind of thing like, you're in this and you're going, oh God, I'm waiting for the pullback. I'm waiting for the pullback, right? It never comes. Oh, I'm waiting for the pullback. Well, you got some here. But that might be something where, depending on what you're using to identify areas of interest. So I might turn on the market structure here and be looking for imbalances or fair value gaps. Right now, not to digress into another indicator, but this is just an example, right? You could be using the devil's edge or volume profile or whatever you may be using to identify areas of interest. This is just not a bad one, particularly for shorter term stuff. So if we get a little push into a fair value gap, that might be an area where we say, okay, I'm going to put that on short. End of the day here, we get a little reversal here, so we're getting breaks of structure. So for example, just basic market structure here, we get a swing, we get a retrace, we get a break of structure, we get a retrace, we get a break of structure, we get a retrace. Right, those are areas, right, in that retrace where you might look at that and say, oh, okay, well here we're coming into the end of the day. I've now had a trend change. So we've had all downtrend all day long, right? It's on a 5 minute, right? You might look on the 1 as well, but 5 minutes quite effective for this kind of trading. So okay, oh wait, I've had a trend change here. So I know. Let me rephrase that. After a break of structure, we can anticipate, right? We don't know, right? There's no knowing, but we can anticipate. The most common thing to anticipate would be a retrace after the break of structure. And you can see it's the same thing on the way down. Break of structure, retrace, break of structure, retrace, break of structure, retrace, this retrace. Oh, we get a change of character and a break of structure. So it's on the push and the retrace. So here is a classic example. Here we push, we retrace. Now, do you want to turn it on long? Yeah, right. You get another break of structure. Now this is tougher, right? Because you had a change of character here that might have scared you out. Retrace. That's probably too close to the end of the day. But those are just examples. Again, it doesn't have to be. I'm not trying to pimp our market structure indicator. It's just they're commonly used, right? Trying to identify which side of the market to be on. You can see here at the end of the day, the trend has gone from down to up. Okay, well, whoa, do I want to be a buyer or a seller? You want to try and be in sync with the market structure, right? So if we've had a little upswing here, those retraces are potential buying opportunities. Now, if we come back here, we get that change, right? Here's the swing, right? Again, I just happen to know from today. So we swing and then we get the retrace. Now when we're down here with all those exhaustion prints here, remember I turned those on. Oh, where are they? I turned those on. I think I did. Oh, pardon me. It was inverse imbalances. Right. So, you see, they're on here. I just turned them on the chart. But here, so look at all these shorts here. Oh, do I want to be shorting here? Swing, higher high, higher low. We get that last pump into the end of the day. And note, at each of the lows, right? That's kind of what you're looking for. At each of the lows, what am I seeing? I'm seeing trap traders. I'm seeing aggressive sellers at the low. But there's no follow through. Look at the delta. Well, if they're aggressively selling it at the low, why is the delta positive? Right? Exhaustion, right? Very commonly you'll see that exhaustion. Up, right? Value areas are climbing. That's the kind of place where you'd say, okay, I will turn it on long here. Looking for at least 2 of these, and I might do that. Look for those within 2 bars. If I see that with any 2 bars, take the long. Remember, it's going to enter at the open of the next candle. Okay, that's probably give you enough to think about and work with. Just a reminder, all of our tools, Footprint as well as Footprint Autotrader, all available for a trial. So you can try this out before making an investment. These are, there's a substantial investment here. So be sure you like it and you see value in it before you make the investment. If you're a footprint trader, this is very appealing because it removes that immediate identification of, okay, what am I seeing here? What am I seeing here? Right? Okay, these are the things I'd like to see at pivots. Let me see if I can get 2 of them. Turn it on. Okay, with that, I'll wrap it there. And as a reminder, right, if you want to trial any of this, just get over to our website, TradeDevils-Indicators.com. Okay, guys, talk to you later.